everybody, it's Tracey Munns here, Financial Advisor for VerdiPlus. It is the 10th of November 2016 and we have just had the latest Reserve Bank announcement on the official cash rate, and we have had a reduction at 9 o'clock this morning by 0.25 points, and it's dropped down to 1.75%. So given that announcement, and also that we had a presidential election announcement late last night and this morning that Donald Trump has been elected to office, I thought it was timely that we just do a bit of a market update on where we're actually at this point in time. So this market update is towards mortgage holders, people that are homeowners or property investors or thinking about getting into the home ownership and property investment market. So firstly, let's talk about the official cash rate reduction. So what you need to understand is that the pricing that drives the interest rates in New Zealand are actually two different pricing models. So on one hand, we've got the official cash rate that is set by the Reserve Bank, and that affects our variable rate. So a reduction on the OCR, generally speaking, does a reduction on the variable rate. On the other side, we've got the fixed rates, and you can fix anywhere from 1 year out to 5 years, or 6 months out to 5 years. And the longer term fixed rates, being 3, 4 and 5 year, are generally dictated by what's happening in overseas markets and offshore. So what you need to be aware of is, as much as the official cash rate dropped, in the last few days, the 3, 4 and 5 year fixed rates have actually increased. So to give you an indication on what that looks like, we've currently got a standard variable rate in the market of around about 5.5%. Now that's rate card rate. You may get discounts on that and you could be paying considerably lower, but that's the standard rate. And then if we look at the what happened in the 5-year rate recently, a few days ago the 5-year rate was sitting at around about 4.7%, 4.8%, and that is now going up to 5.1%. So we have had a 0.4% increase in the longer term rates just over the last few days. Now, we have had a 0.25% drop today on the variable rate. So you would expect that variable rate to become 5.25%. Now, it may not. So what happened with the last OCR reduction, the banks actually only passed on a portion of that reduction. So again, we may not see that much of an increase. And I think it's about 11 o'clock in the morning now. The announcement was made at 9. We normally have rate drops between 9 o'clock and now, and there haven't been any announcements from the banks as yet. So that says to me that there's a bit of thought process going on about what margins the banks are going to be holding on to and passing through. Now, what I want to raise with you is that right now, in the last few months and even the last year or so, our fixed rates have been lower than our variable rates. So we've had rates in the 4s while our variable rate's been in the 5s. I think that we're going to potentially start seeing a pendulum change in that, and if our fixed rates start going above 5% and our discounted variable rates start going below 5%, there may be a shift in bias towards, instead of fixing rates, we might keep our lending on variable rates instead. So I just need you to be aware that there are two pricing models going on, and you need to do that. So if I were a borrower, what would I do and what would I be advising? This is such an individual position, and it really comes down to your risk adversity. If you are very concerned and conservative and you need to know what your repayments are and you don't like what's going on in the global community right now, you may want to consider fixing your mortgage right now, because let's be honest, rates below 5% are incredible. They are very low, so it gives you that sense of certainty to know exactly what your payments are. If you are quite happy to keep an eye on the market and be in tune with what's going on, then you may elect to stay on a discounted variable rate and just watch. And if things start to go up and you don't like it, you can obviously fix it any particular time. So just bear in mind what is going on right now in the segment of interest rates. Now, the other change that's taking place is to do with lenders and how they're offering interest-only loans. And this is more relevant for property investors. So interest-only lending basically means that you're not doing any debt reduction. So if you have a $400,000 loan, you will still have a $400,000 loan 5 years from now. You're not reducing the debt principal. And property investors do that because they want to ensure that they've got good cash flow within the property, that the rent is covering the debt. Now, what's happening with interest-only loans is if you have the security as the rental property, so if the bank is basing your loan on the rental property security, the maximum interest only you can get on your loan right now is 5 years. So you get a 5 years interest only loan. Now, for property investors, sometimes what you do is that you have your home as the security for a portion of the loan. And what's happening are the banks are restricting any interest-only loans on an owner-occupied security to 2 years. So, for example, if you were to buy a $400,000 investment property, I'll just lower that. So if you were to buy a $400,000 investment property, sorry, I just got told that you may not have been able to see that, then you may have a portion with one bank, so Bank B, which is a 60% loan, and you might have a portion secured on your home as the 40% portion. So it's 100% borrowing, but you're utilising equity. So this portion here may only be for 2 years interest only, whereas this portion here could be for 5 years interest only. So what happens at the 2 year mark? So at the 2 year mark, that's when your interest only time frame will expire and you will need to reapply and approach the bank to see if you can get that renewed. They may say no, dependent on the market conditions, or you may get a longer extension. Now the importance of this is, if you have a loan here and you're going to fix your loan for 3 years on a 3-year fixed rate, and this is the time frame here, so you've got 1, 2, so there's year 1, year 2, year 3. You are going to have interest only for that portion, and then you have to reapply at the end of 2 years for interest only. If they say no, you need to be prepared that this 1 year that's left is going to be a principal and interest loan payment. So you're going to have a cash flow variance in what's happening with your rental portfolio at that point in time. So the options are to be aware that you may only fix for 2 years or less, to be aware that if you go for a longer term rate that it might switch to principal and interest, and to be able to manage that. Now the other thing just on the interest only, and this is on either side, if you've currently got a mortgage and you're on, say, a 3-year fixed rate, and let's say you did that 2 years ago. So 2 years ago you bought a property or you fixed your loan for 3 years and you had 5 years interest only secured then. So we are basically at a 3-year fixed rate has expired. You did 5 years interest only and you're going to refix your loan for 3 years. So the original fixed portion for 3 years and the second fixed portion is 6 years, which means that your 5 years interest only will again expire before your fixed rate does, and you may need to switch to principal and interest payments. So if you have a current fixed rate investment loan expiring and you're looking at fixing it, please check the interest only expiry date on the loan, and that may alter your decision on how long you fix for. So those are the main updates that I have for you today. So market update with regards to interest rates, and one with regards to what's happening with interest only and refixing rates. As far as what's going to happen globally with the introduction of Donald Trump, time will tell. I think that there is no point guessing what might happen. With anything that we're doing on the mortgage front, we can only base our decisions on what we know today and make an informed decision with the information that we have. And you can sit there and say, do I fix or do I float my loan, and how do I do that? So don't get caught up in everything that's happening globally and what is going on. Just take the information that you have today and make a decision that sits with you today that you know you're happy with. If anyone has got any questions, you can contact us. Our website is VerdiPlus.com. So VerdiPlus.com, so you can go to our website and you can lodge a support request or find our contact details at that point in time. So thank you everyone, have a great day.